Hi, today in this video you will get a clear idea about cash flow statement. So in this you will get a clear idea what is cash flow and what are the different types of cash flow, the methods of preparing cash flow. So first we will go about what is cash flow statement.
We discuss about cash flow statement according to AS3. The meaning is the statement which shows the inflows and the outflow, the cash of equipment. So an enterprise uses the relevant account period that is called cash flow statement. This is the meaning of cash and cash equipment. The cash equipment refers to the short-term investment and easily converted into cash without the use is value. If say maturity period less than 3 months, the demand of his bank. And the notice the investment in shares is not a cash equivalent. So the reason was the significant risk associated with investment in shares. Now we discuss about meaning of cash change. The change of movement in cash or cash equivalent is called cash flow. And the cash flow is divided into two categories: the cash inflow and cash outflow. Notice the movement within cash and cash equivalents are not in cash flow as per AS3, and example is cash deposit in the bank. This we have discussed about types of cash flows. As per AS3, there are three types of cash flows: like operating cash flow, investing cash flow, and financial cash flow. And operating cash flow. Operating cash flow means generated through operating activities in our enterprise. And operating activities. Operating activities. Operating activities, the revenue generated of a business are named as operating activities. For example, purchase of goods. Purchase of goods means we purchase it from another company. So the money will go outside the company. So that is outflow. That is outflow our money. Second example is sale of goods. And sale of goods means if it is selling the goods, that money comes to our business. So that is an inflow. That is inflow.
So previously you have learned about the operating cash flow. So in this you will learn about the second type of cash flow, it is the investing cash flow. So investing cash flow means that it's the cash flow resulting from the sale or purchase of long-term assets and investments. For example, purchase of shares. So when we are purchasing the shares, the money is going outside the business. So it's an outflow. Next, we can say that investments and dividends, which are received on investments, are an example of investing activities. So, interest and dividend. So, the investments and dividends are received. So, it's an inflow. Next is we are going to discuss about the financing cash flow. So financing cash flow means that the cash which are generated through the financial activities of the business. So it is known as the financing cash flow. For example, proceeds from issue of equity shares. So this is an inflow and repayments of loan. A repayment of loan makes it's an outflow. So next we are going to discuss about the methods of preparing cash flow. So there are two methods to make the cash flow. One is direct method and next is indirect method. So first we are going to discuss about the direct method. Before that, when we are asked a question to prepare a cash flow, and if nothing is said in the question, you should follow a direct method or indirect method. If nothing is said, you should always go for the indirect method. So next, we are going to discuss the direct method. So in direct method, there are three steps. First, you should prepare the cash flow from operating activity, cash flow from financing activity, cash flow from investing activity, and cash flow from financing activity. So those format for preparing these three cash flows. So first, I am going to discuss the operating activity. So this is the format that you should follow while preparing the cash flow from operating activity in direct method. So first you should say that operating activity. So you should write a cash flow from operating activity. After writing this cash flow from operating activity, we should prepare all the revenues, all the revenues of the business. First is cash received from the sale of goods. So cash received from the sale of goods means that the cash is coming into the business. So we should write the amount at the inner column. So next is cash received from trade receivables. So this the cash is received into our business. So this also we are writing in the inside column, inner column. Next is cash received from the sale of services. So this in this three cases, the cash all are received into the business. So the cash all coming into the business. So we should add these three items. So next is payment for the cash purchase. Payment for the cash purchase means that the cash is going outside the business. So we should write the amount in the inner column, and it should be deducted. Next is payment to the trade payables. So we should pay to our creditors. So it's an outflow. So we should deduct that. Then payment of operating expense. So these are the operating expenses. So it also should be deducted, and it's an outflow. So a payment to operating expense, you can say the example of power, rent, electricity, etc. So next is payment of wages and salaries. So payments to wages and means that the cash is going outside. So and it's an example, it's an outflow. So it also should be deducted. Next is payment for income tax. Payment to income tax, that also is an outflow and we should be deducted. We should add and deduct all the items, and we should calculate the amount in the outer column. Next is adjustment for extraordinary items. Extraordinary items means that we can say, for example, earthquakes, some deductions or some payments given by the government for some natural disasters or such that it comes under extraordinary items. So these items should be added. So these items should be added, and sometimes there should be some exemption in tax. So sometimes there should be some exemptions in tax, and it should be deducted. Some tax should be deducted. After all, we should say that net cash flow from operating activity. So by following these methods, you will get the cash flow from operating activity. You should know that if you are getting a negative figure here after adding and deducting all the items, and if you are getting a negative figure in the operating activity, you should write the cash flow used in operating activity. cash flow from investing activity under the direct method. So this is the format of preparing the cash flow from investing activity. First is the sale of PPE, property, plant and equipment. So in the sales means that the it's an inflow. So we should write the amount in the inner column. And next is sale of intangible assets. So this is also an inflow. Next is sale of investments. So that is also an inflow. Next is interest and dividend received. So this is also an inflow. So we are writing the amount in the inner column. Next is purchase of PPE. In this we understand that the cash is an outflow. So we should deduct this and put it in a bracket. Next is purchase of investments. By purchasing the investments, it's an outflow. So we should deduct them. Next, after adding all the payments and deducting all the receipts, we will get that net cash flow or used in investing activity. We should note that if we are getting a positive figure, you should write that net cash flow in investing activity. And if you are getting a negative figure in investing activity, you should say that the cash flow used in investing activity. So this is the format for creating cash flow from investing activity under the direct method. So next we are coming to the last, which is the financing activity. So this is the format. And first we should write the issue of equity share. So by issuing equity shares, so cash is coming into our business. Also it's an inflow. Next is issue of preference share. So it is also an inflow. Next is issue of debentures. It is also an example. It's an inflow. Next is the borrowings. It's an inflow. Next is buyback of equity shares. So by buying back recalling the shares, it's an outflow. So it's an outflow and it should be denoted in brackets. So next is redemption of debentures. So it's an outflow and it should be denoted in brackets. And next is interest on dividend. It's an outflow. So by adding and deducting all these items, you will get the net cash from or used in financing activity. If we are getting a positive symbol, as I told earlier, we should write the net cash flow from financing activity, and if it's a negative figure, you should write net cash flow used in financing activity. And next is the main step, which is increase or decrease in the cash and cash equity. At this step we should add the operating activity, investing activity, and the financing activity, and this amount should be written in the outer column. So if you are getting a positive figure, you should write increase in cash and cash equivalent, and if you are getting a negative figure, you should write decrease in cash and cash equivalents. So by this, next we should add the opening cash and cash equivalent. So by adding the opening cash and cash equivalent, after adding this, next is the closing cash and cash equivalent. At this stage, you can it's a formula, and at this stage you can check whether your cash flow in the direct method is correct or not by adding this and increase or decrease in cash and cash equivalent and opening stock. You will get the closing cash and cash equivalents, and this closing cash and cash equivalents will be given in the question. And so this you can cross verify and check whether the answer is whether your answer is correct or wrong. So I will also once again I will also explain that in after getting the you should once again you say that this net cash flow you from or used in financing activity. After that, you should add the increase or decrease in cash and cash equivalent. You should add all the items, which is the operating activity, investing activity, and financing activity. And you should denote the amount the outer column. Next is add the opening cash and cash equivalent. And by adding this opening cash and cash equivalent, you will get the closing cash and cash equivalent. And this closing cash and cash equivalents will be given in your question. And this is the area where you can cross verify your answer and check whether your answer is right or wrong. And if you are not getting the closing stock as given in the question, then it is clear that you had made a mistake in your while preparing the cash and cash equivalents. So this is all about the cash flow in direct method. So next we can discuss about the indirect method.
So next we will be discussing about the indirect method of cash flow statements. The indirect method of ascertaining cash flow from operating activities begins with the amount of net profit or loss. This is because statement of profit and loss incorporates the effect of all operating activities of an enterprise. However, statement of P&L is prepared on accrual basis and not on cash basis. So there are certain non-cash items like depreciation which have to be adjusted, and therefore it becomes very necessary to adjust the amount of net profit or loss as shown by the statement of P&L for arriving at the cash flow from operating activities. So the only difference between the direct and indirect method comes in the operating activities. Only the operating activities format is different from that of the direct method. And as per AS3, under indirect method, net cash flow from operating activities is determined by adjusting net profit or loss of the effect of non-cash items like depreciation, goodwill, written off, provisions, deferred taxes, etc. and all other items which the cash effects are investing or financing cash flows. Such treatment depends upon their nature, and all the investing and financial incomes are to be deducted from the amount of net profit, while all such expenses are to be added back. For example, finance cost, which is the financing cash outflow, is added back, while other income such as interest received, which is investing cash inflow, is to be deducted from the amount of profit. And the changes in current assets and liabilities during the period, increase in current assets and decrease in current liabilities are to be detected, while increase in current liabilities and decrease in current assets are to be added up. Next we will be dealing with the format of indirect method, and in this format the cash flow from operating activities begins with the net profit before tax and extraordinary items, and to the net profit we should add all the non-cash expenses and non-operating expenses which will be depreciation, goodwill, interest paid, loss and sale of fixed assets, foreign exchange, etc. And then we should deduct the non-operating incomes such as dividend received, profit and sale of fixed assets, and interest received. And after calculating all of these, we will receive as a figure which will be the operating profit before working capital changes. And after that, we should add the decrease in current assets and increase in current liabilities. After that, we should reduce or deduct the increase in current assets and decrease in current liabilities. After all these adjustments, we will get a figure which will be the cash generated from operating activities, and from that we should deduct the income tax paid, and after we will get the cash flow before extraordinary items, and then we should add or less the extraordinary items according to its nature, and that is the final thing. And after that we will get the net cash flow from operating activities.
We already discussed about the format of direct method and indirect method. So we are discussing about the problem of direct method, and this the summary of cash transaction of Anju Limited for the year ended March 31st, 2005. Now issue of equity shares, receipt from customers, sales of fixed asset, and in payment side payment to creditors, purchase of fixed assets, expenses, wages and salaries, tax, dividend, repayment of bank loan, etc. So, we are requested to prepare a cash flow statement for the year ended March 31st, 2005 in the accordance with AS3 using that method. So, first of all, we are preparing cash flow from operating activities. The first one is receipt from customers. It is an inflow, so it is positive figure 8,400, and payment to creditors. It is outflow. We are paying to creditors, so it is a negative figure. And payment and similar to payment of wages and salaries, payment of overhead expenses. These are also a negative figure. The cash generated from operation is 1,500. The payment of tax is also deducted from this. It is 750, and the net flow from operating activity is 750. Next one is cash flow from investing activities. Proceeds on sales of fixed assets. It is 300. It is an inflow. And the next one is acquisition of fixed asset. It is an outflow. We are paying for the fixed asset, so it is an negative figure. So the net flow from investing activity is 300. It is an outflow. It is a negative figure. Okay. And the next one is cash flow from financing activity. Proceeds on issue of shares. It is an inflow. So it is 900. And payment of dividend is it is an outflow. We are paying dividend, so it is 150 negative. Repayment of bank loan, it is also an outflow, so it is also put into the bracket of 900. And the net flow used in financing activity is 150. It is also a negative figure. So the net cash flow from the year ended March 31st, 2005 is 300. Cash balance at the beginning of the period is 150. Cash balance at the end of the period is
Hi, so today we already heard about what is direct, indirect, and also we can go through some external. Now this is a real external of indirect method. So this, if you all know that we have key activities like operating activity, investing activity, and financing activity, and we have already gone through the direct method. So there is a slight difference in the indirect and direct method. There is only a difference in operating activity. So here we already have the profit of pure activities, and this is the actual expense coming back here, non-cash and non-operating expense, and non-cash and non-operating incomes. Actually, what is this? Happening here is non-cash and non-operating expense. Actually, these are expense or revenue that affect net income, do not record actual cash transaction during the period, but they need to be adjusted in the cash flows, but they do not represent real cash flows or inflows. So they will affect the cash flows as a affect the net income, but they do not have a direct flow of cash. So we want it to be adjusted as like another adjustment. Like here, the most of the cases there are examples that I have picked up here. Depreciation, loss on asset, share discount method of profit for tax. Okay. And there is non-cash and non-operating income that involve profit on sale of asset. So here, if we want it to be added to here, and if we want to be deducted. And note this as, look, actually so that we increase our asset is going to increase. But in the cash flows, when the liability increase, current liability, not the point, it is not non-current, it is current liabilities. We wanted to, in increase in current liabilities, it should be add decrease in current asset, and less increase in current asset, and less decrease in current liability. If you go confused, just pick the first one, just let the first one. Increase in current liabilities, you should add, then you will automatically get the balance and you will get the right one. So after that, we will go cash generated from or used in operation. If it is positive, it will be from. If it is negative, we will use used in. So we will go to net cash generated as 2 lakh rupees, and the taxation paid we should be deducted 1,500. So we got a total of profit is 1,98,500. So the next cash from or used in operation is 2 lakh rupees. We already seen that tax bill is 1,500. So cash flow from or used. So actually it is from or used. It is from because it is a positive figure. The next one is cash flow from investing activity. We already got about current liability and current assets. So here it comes non-current and non-current liability. So here public asset, the cash is going out. So you have a negative income of negative figure of 80,000. Purchase of investment negative 50,000. Sale of all the assets like sale of assets, sale of investment, the interest received and dividend received are positive figures. Note the point, dividend received is under investing activity and dividend payment is under financing activity. Say once more, dividend received come under investing activities and dividend payment come under financing activities. So here we have a negative figure, so cash flow used in investing activities. The last and final one is cash flow from financing activities. Issue of share capital, we got the money, it is an inflow, so 150,000 positive figure. Prepayment of bond, redemption of preferential capital is negative figure. Proceeds from loan inflow, so 20,000 rupees. Repayment of loan, it is an outflow, negative 30,000. Interest paid and dividend paid is negative 1,000. We already see that interest received and dividend received come under investing activities, while interest paid and dividend paid come under financing activities is a negative figure. So we got it is a negative figure. So cash flow used in investing activities. So net increase or decrease, we take the sum of A, B and C, the three category. We will get a positive figure of 1,03,500 and here we know how we get the correct answer or not. When we add the opening balance, we should got the closing balance. So here we add the cash and cash equivalents at the beginning of the year 16,500. So the cash and cash equivalent at the end of the period 1,20,000. Okay, I hope you will understand. If you don't understand, you can comment below. So you can subscribe our channel. So by this, thank you.